Okay, today I want to go through a couple of trades I've done in the last couple of days. It's the 19th of August 2009. Okay, starting off with the GBP, this is the daily chart as you can see. Okay, so we've finally put in this last fifth wave of this last big up move, which has found some serious resistance up around this 170 region up here with the Fibonacci long-term extension, which we shorted to net us quite a comfortable amount of pips on the way down. Now it's come back down to the 55. If you come back about a month ago, you can see it hung around the 55 here, found support and rallied strongly off it here and here. Also, if we go right the way back down to April, as you can see this zone here, which is where we started this strong up move, was around the 55. The 55 took control, and around this region here, you can see it broke it there. Didn't break the 89. Strong move up, come back to it, and then pulled off it, and away we went. The 80 EMA, the gold line, took control. Okay, going back to where we are today, you kind of almost anticipate a similar situation, really. So you can see what happened here. The price comes down around to the 55, and then strong bullish engulfing candle comes off it, which almost is exactly what we've got here. Which is yesterday. This is live trading today. This is the daily chart, remember. So really we're looking for conservatable, repeatable trades. So, probability would say that this has happened once, twice, 3 times almost. So, this is what you're thinking when you're coming into this trading day. So the price action has come strongly down, closed below the 55, this line here. Now what you're anticipating is either a confirmation to the downside, or a strong move up, which is what actually happened to the upside. So we go into a smaller time frame, and then we can kind of judge what's going on. Your trade plan at the moment is basically you're looking for a confirmation that this is going down. So you can see, it's pulled down. You're looking for this 55, this pink line here, to really hold in price and to send it lower. However, you can see on the smaller time frame that it didn't hold in, and a strong rally was the result. Okay, so we're going into the 4 hour now. As you can see, this is the strong move up from the fifth wave, and then we've come down from the 170 region all the way down to almost 163. Now this region here is where the 55 is, around this sort of region here. Don't forget, it's a longer time frame, so it's not on this chart. However, you know that the 55 is around this region here. So this is your key candle here. Basically, you're looking for the price action has really come down strongly to aggressively past this level here, which is the 63.72 region, which is the box range from the fourth wave. So you're really expecting that to hold in. However, it doesn't. A strong candle closes below it and then pulls down to the this is the 365 moving average. So you can see the price action's really aggressively moved away from the highs. Now, what you're thinking here is a couple of things. Basically, you're looking for if this move is going to continue downwards, you're looking for let's see if we can find it. So you're looking for this situation here. You can see aggressive move down and again. And then you have these little candles here. They're little spinners. They're not engulfing candles. They're not shooting stars. They're not hammers. They're kind of just small candles, consolidation area basically. It's waiting for this gold line, this 80 EMA, to catch up with price in order to send it down into lower regions. But these candles of what you're looking for basically say that this is you anticipate lower prices are to come. This isn't what happened here. You can see the price moved down. You've got you've got this candle here, which is fine. It's not really a hammer. It's just kind of a normal, it's like almost a spinner. It's kind of a bullish spinner. But then this candle here, you can see it doesn't make a lower low than this candle here, and also it closes above that candle there, and it closes to its highs. So that's kind of you've got almost a bullish engulfing candle there. It's not quite a hammer because the tail's not long enough, but that's what I class as a really bullish candle close. It's close to its highs, whereas you can see if we go back up here, these candles don't really close to their highs, because obviously every time it pops back up, someone's selling it because they know it's going down. This isn't what happened here. It didn't get pushed back down, so this is a key candle. You get a MACD signal here as well. as you can see down the bottom. So this is exactly where you want to buy it. On the close of that candle, you want to get long anywhere around there. It's not going to pull back much because of the way it's closed from the 4 hours. So anywhere you can get long of anywhere around there, around that sort of region. I think I got long of around 38, I think it was, something around there on that actual level. 38, 36, I can't remember the exact price. Somewhere around there. My target was basically quite conservative, to be honest. It was the top of this region here, was around 28s. You can see there's something there around 28s. There's a level there, there's a level there, there's a level there, and that's exactly where I anticipate the price to go. The 21 EMA was actually at 28s as well, so that's anticipated where the price was going to go, and that's exactly what happened. So yeah, basically we netted about 90 pips off that move. However, you could have stayed in it as what's happened now. The price really did take off and pull back to the 38.2 retracement level, which is there. You can see it's a 68.2, but this Fibonacci is reversed, so it's actually a 38.2 around this sort of region here, and now it's come back down again. So we really don't know where it's going to go at the moment. It's stuck in this. It's quite a tight range now. It's kind of a bit of a consolidation. You can see it's put in a lower high than this here, and it's put in a lower low. It's failing to put in a lower low here, so we're just really waiting to see what's happened and where price is going. In situations like this, you put in your boundaries, as I've said before. There's your boundary there, 65.92, and around sort of that region there, 60. If I just do this properly, around the 62.70 region. That's your range. That's your box range. So any signals or any candles patterns around these sort of regions that indicate price is going to reverse, you take them on for 50 to 100 pips. Okay, another trade I wanted to go through is the Euro trade, which I actually exited at a loss. First time I've done that in about 4 months. First time I've had a trade in loss. You can see that prices. This is on the 4 hour now, so you can see prices basically moved aggressively down here, like on the pound, pull back up. It's come into this sort of downward channel. You can see there's a line there, and then there's a line there. That's kind of the channel. There's a lot of lines on here at the moment. If I just remove this Fibonacci study, so you guys can actually see what's going on. Okay, I'll just leave it there. So yeah, you can see what's going on here now. This moved aggressively down, and what we're anticipating is a little pullback and a move down again. Because it's made a lower high than this, and this is a lower high than this, and this is a lower low than this. However, this region here, this you've almost got a doji evening star. It's actually an evening star, but it's almost a doji evening star, which is a strong signal that you've got lower prices to come. I actually entered it at 94s, I think.